Hi everyone, welcome to this week's edition of Money Talk NGX Weekly Review. If you're watching for the first time, hit the subscribe button. We drop this breakdown every week. This week was a very different story from the last few weeks. The market came back strong. 4 of the 5 trading days were green. We had 59 stocks gaining during the week, while only 28 of them fell, and the index added over 6% in a single week. Let me walk you through what happened during the week. On the first day, which is Monday, July 6th, the recovery started here. The market gained 2.15%, with the Nigerian exchange group itself, the NGX group, gained nearly 10% as investors came back to the floor with conviction after the June correction. On the second day of the week, the momentum continued with the index gaining 1.24%, rising to 237,083 points on broad-based buying across industrial goods, consumer goods, and energy. The volume hit 493 million shares, which shows strong participation across board. Wednesday, July 8th, was a standard session of the week, with the all share index surging 2.27% and adding 3.45 trillion naira to the market cap just in one day. Airtel Africa hit the 10% daily upper limit, and we'll talk about this briefly in the coming slides. On the fourth day, which is Thursday, we had a fifth consecutive positive session starting from the previous week's close on Friday, with MTN Nigeria and Tier 1 banks leading the demand for this day. And on the last day of the week, which is Friday, we had a mild consolidation and the market dipped just 0.02%, with volume falling by 73%. We believe these are short-term traders taking profit from the gains during the week. This is an healthy sign, which means Friday selling was orderly and was not panic selling. Based on this, we had a weekly gain of 6.43%, and the AISI closed at 243,954 points. Market cap recovered to 856.45 trillion. That is a 9.35 trillion recovery from the June correction. Let's talk about why the market recovered, or the reason for some of the recovery in the market. Here, I'll be highlighting 4 things that kind of triggered some of the transactions this week and might influence what happens in the remaining part of the month. The first on our list is the S&P Global placing Nigeria on its watch list for the frontier market status. This news dropped on Wednesday, and we believe that's part of what triggered shares like Airtel Africa moving by 10% and the 3.48 trillion naira single session gain. Now, to be precise, this is different from the FTSE Russell story I covered last week. The FTSE Russell suspended its reclassification of Nigeria, but on the other hand, the S&P Global is now watching Nigeria for the potential frontier market inclusion. 2 different index providers, 2 separate timelines, and the S&P signal is a fresh positive catalyst that we believe would move the market. What this means practically is that the passive fund managers who track the S&P indices would start positioning for potential Nigerian market inclusion, and this created a buying demand in some of the most liquid names on the NGX, the likes of MTN, as I said earlier, and banking sector stocks. The second item here is Dangote Refinery, who cut their fuel price twice during the week. The refinery reduced its wholesale petrol price to 1,005 naira per litre, and later dropped it again to 1,025 naira per litre during the week as it transitioned from processing older and lower cost crude. This matters beyond just the fuel price. We believe that reduced import dependence means a lower import bill, which means stronger naira, and which means a better FX condition for foreign investors. The CBN external reverse crossed the 51 billion US dollars this week, and this is their highest level in 17 years. We believe that's a direct consequence of this structural change. And the third thing on our list here is the NGX half-year index rebalancing, which was initiated on the 1st of July. Every 6 months, the NGX adjusts the stock that sits in its benchmark indices based on liquidity, governance, and market capitalization. This time, NASCON Allied Industries and Unilever Nigeria were added to the NGX 30 list, while Oando and Transcorp were both removed. When a stock gets added to the index, we believe passive funds that track this would be forced to buy, which we believe would push for some buying in the consumer goods name. The fourth thing we are looking at is the T+1 settlement friction clearing. When the settlement cycle was compressed in June, institutional investors, we believe, temporarily rotated into the money market while they adjust their processes. By early July, that adjustment, we believe, is done, and we believe most of them are back in the equities market. And that's why we see some of this movement during the week. As I said earlier, there were some rebalancing done for the half year. So let's spend a moment on the index rebalancing because we believe this is something the retail investors shouldn't overlook. As I said, Oando was removed from the NGX 30. We are not saying this is a bad company. This is due to the delayed regulatory approval for the 2025 audited financial statement, and the market responded to this. Oando is currently trading at 41% discount to its 52-week high. Also, we have Transcorp that was removed. This reflects a broader trend where fund managers are reducing their exposure to the holding company structure during the bank recapitalization. On the other hand, we have the Afri-Invest Dividend Yield Index. They added Seplat, Fidelity Bank, Stanbic IBTC, Custodian, and NACO, and they removed Access Holding from their list. This shift is toward defensive cash-generating names with strong dividend history. Now, the gainers. The first person on the list today is International Breweries, up 40% during the week. We spoke about this last week, and also on the 8th of July, International Breweries filed a notice to the NGX announcing a share capital restructuring. They posted a pre-tax profit of 88.9 billion in 2025 after years of losses, and the company still cannot pay dividend because it carries an accumulated loss of 191 billion from prior years. Their plan is to apply their share premium account to wipe out those accumulated losses, and we believe this should clear the path for future dividend payment. The return of excess capital to shareholders was received as a good signal from investors. Just to note, this isn't a share split or consolidation as some of the companies did last week, and the share count stays the same. The 40% price move reflects the market positive reaction to finally having a dividend pathway announced. And we also have the Q1 2026 pre-tax profit, which also came in at 40.3 billion naira, up 15% year on year. And this is a real substance behind it. RTP score is also up 32%. And one of the news is that the AGM on June 2, the shareholders approved a plan to raise up to 10 billion naira through new equity. And that will come through the medium of public offering, private placement, and rights issues. The company has already been one of the best performing low price stock on the NGX in 2026, up 184% just in the first half of the year. They moved from 3.5 naira to 9.95 naira. The capital raised approval added fresh momentum to an already strong run for the year. On the list, we also have livestock feeds, and they are up 28.47% for the week ending July 10. This is also backed by earnings. Despite a 29% decline in revenue in Q1 2026, livestock feeds dramatically improved their profitability through higher cost control and significant reduction in finance costs. Profit after tax went from 57 million in Q1 2025 to 856.6 million in Q1 2026. This is a 15 times improvement. That's a fundamental earning recovery, not just a sector bounce. One of our familiar names here is First Oat Co, up 25.82%. We've had 3 weeks of volatility in both directions, and this week the market appears to be settling on the view that the CBN Oatco drag-through are less threatening than first feared. The public comments during a period closed on July 9th, and the recovery in First Oatco, GTCO, and Zenith this week suggests institutional investors are repositioning back into the names they exited when the draft initially dropped. Fifth person on our list is also a familiar name, Bank PLC, came up by 23.65%. You can see all our top performers are above 20%. The ticker already changed from Abe BDS to Abe Bank, reflecting their commercial bank license upgrade. This is a fundamental re-rating story. A mortgage bank becoming a commercial bank gains a much larger addressable market with a broader product range and an improved regulatory standing. The price is a repricing to reflect that transition. On the flip side, we also have our top losers, and I want to use the first name as a teaching moment. If you see Mark Nichols Consolidated, the stock history over the last 3 weeks, we had them up 26.47% 2 weeks ago, down 18.6% last week, and down again 28.5% this week. The same stock in opposite direction every week. This is a textbook accumulate and distribute behavior. Someone bought aggressively, pushed the prices up, then sold into the demand it created. For anyone who chased the stock upward, this is why we don't chase short-term momentum without understanding the fundamentals driving it. The fundamental story on Mark Nichols has not changed in 3 weeks. The prices has swung nearly 90%, and there is nothing significant to point to why it is moving. So that tells us everything we need to know. Thomas Wyatt is down 11.64%. That's the second name on our list, and they've been under a trading suspension for failing to file mandatory financial statements. That suspension was lifted on Monday, July 6th, at the first day trading day of the week, and we had an 11.64 decline to reflect pent-up selling that has been waiting while trading was altered. Investors who were trapped in the stock used the first available opportunity to exit. We also have Geregu Power down 10% during the week, and it hits the daily 10% limit on a day during the week. The story runs back to May 2026 when Femi Otedola exited as chairman in a 1.09 trillion deal, transferring majority control to MAM Energy Limited. At the same time, their Q1 2026 net profit fell 80% following the ownership transition. The combination of the new ownership uncertainty and the sharp earning drop has weighed on the stock. This week's limit down move reflects that lingering uncertainty. Guinness Nigeria is the fourth person on the list, down 9.99%, just shy of 10%. This was Friday's most consequential single stock move among the blue chips name, shedding 36.5 naira in one session. It's part of the recurring pattern since June correction, with investors or traders taking profit in consumer names that delivered large year-to-date gain. And we can see that just in the last 1 year, Guinness Nigeria has grown 239.88% in the last 1 year, although their year-to-date position is a loss of about 5%. The last person on our list this today is Ecobank Transnational, that they are down, and they are down 9.98%, also shy of 10%. This is an interesting contrast because on Thursday, July 9th, the day before the NGX decline, Ecobank listed a 450 million sustainable agriculture and nature bond on the London Stock Exchange. It was the world's first ICMA designated nature bond issued by a commercial bank, and they attracted 1.36 billion US dollars in order against the 350 million target. That's a 3.9x oversubscription. International investors are clearly confident in Ecobank, and the 9.98% drop on the NGX the next day is purely domestic profit taking. Two completely different signals from the same company on consecutive days. On our big stories during the week, we already spoke about Dangote's fuel price drop and the impact on the Nigerian trade surplus. We also have the banking recapitalization shaping the sector. And from what we can see, the Access Bank Holdings removal from the AfriInvest Dividend Yield Index is a direct consequence of the capital preservation constraint that comes with the CBN recapitalization program. We expect this team to continue driving consolidation, smaller banks looking for major pattern, and the larger banks raising capital to meet new threshold if they happen in the future. This is a multi-quarter story that keeps generating news. The big picture for the week is that the market confirmed that June's correction was exactly just a correction and not a structural reversal. The recovery was broad-based, and we believe these are institutionally led and supported by real macro tailwind, such as the lower fuel costs, the rising FX reserves, the global index attention, and the clearing of the T+1 friction. The question we have for next week is whether the market can consolidate above the 24,000 points or whether the profit taking accelerates. We will be watching this closely. That's it for this week's review. Now let's go to the heatmap to have a sector by sector review and the breakdown. Before we move to that, if this review has been useful for you so far, subscribe on YouTube, follow us on all social media platforms at Monee_talk. And now let's review the heatmap. Okay, so we'll be starting as we always do with the financial services industry. And we can see this is a different story from last week. We kind of have a mixed coloring for the week. We have the greens, we have the red zones. And let's just move to stocks with movement during the week. So we have GTCO, as I said, Zenith, First Holdco recovering during the week, and Stanbic IBTC dropping by 6.63%. Ecobank, we spoke about that. Access Bank recovering during the week, even though they were dropped from the AfriInvest list. They gained. Wema Bank, one of the top gainers, at 11.11%. We have FCNB at 10.2%, Jais at 15%. The NGX group, we spoke about them, but during the week they gained 8% during the week. We also had the insurance sector turning green for this week, and it was a green zone with minor red during the week for the financial services. For the consumer goods sector, just to have a better view, we can also see mostly green during the week, with FTN Cocoa leading the list alongside Honeywell Flour Mill and others. Oh, we missed International Breweries at 40%. We've spoken about them previously, so they are topping the list. Yeah. We also have the industrial group sector with Cortex being positive, Dangote Cement. So you can see HBM Nigeria, this used to be WAPCO, so their name changed during the week. We have the Initiative PLC moving up 19.15%. And this more greens than red this week. Like I said, a different story. In the ICT sector, we also have more greens, with Airtel Africa topping our list in the ICT sector, and MTN and eTransact International not far behind. On the oil and gas sector, Aradel recovered massively with 19.67%. We spoke about them last week. We have Eternal, we have Japo Gold with positive, although we spoke about them last week, also declining during this week. In the services sector, we have a green zone, which we've spoken about Altis Briscoe leading the list here. We also have CI Leasing. We spoke about them last week, recovering this week. In the construction and real estate sector, we have UPDC and UPDC REIT. Both of them were on our list yesterday, with UPDC gaining last week and this week also, and UPDC REIT recovering. The healthcare sector seems to have more red than positive, with Mikio leading the negative list here with 9.96%, and Nimet International recovering with 9.76%. On the agricultural sector was a green zone across board for stocks that moved during the week, with livestock feeds leading the charge here. For this week, conglomerates moved, and they moved up by 4.7%. That's Transcorp. The USCN just declined slightly by 3%, 12.03% during the week. And we also have the utilities with Geregu. We spoke about them already. We have the natural resources, and Thomas Wyatt was the only mover. We've already spoken about them. And we have the investments. VFD is the only one on this list with a slight gain of 0.48%. And that is it for our heatmap review today. I believe this breakdown and heatmap review has been useful for you. So subscribe on our YouTube channel and follow up on all platforms, all our social media platforms, from TikTok to Instagram, LinkedIn, Facebook, and X, to get these insights and breakdown on a weekly basis. Thank you for listening today, and see you next week.